Good morning, good afternoon, good evening, everybody. Today is Monday, November 23rd, 2015. It is 12:04 Eastern Time. And my name is Jerry Furst, founder and director of Investors Education Network, also known as Traders Education Network, broadcasting here on CapitalDiscussions.com. And we have now changed from every Wednesday to Mondays at 12 noon Eastern Time. So go ahead and feel free to join us if you're tuning in on YouTube or searching the Capital Discussions website. Just make a note to your calendar change, and we'll take it from there. For those of you who, where is the Capital Discussions? Capital Discussions. When I logged in, it brought it back out. You just go to CapitalDiscussions.com. If you're not a member, just click on Join on the Community. Otherwise, just click and log in. And so I'm going to go ahead and do something now where I used to do the week ahead. So what I'm going to do is merge a little bit of the week ahead along with the beginner trading group. Because it does definitely impact potential trades and watching your portfolios. So what Tom has done here on the Capital Discussions website is he has the upcoming significant events for the week ahead. And so we've got existing home sales today, which is already out, which is extremely weak. Notice he's got red stars and yellow, gold stars over here. We have GDP announcement tomorrow at 8:30 Eastern Time. Then we have the consumer confidence and Case-Shiller numbers. Then we got durable goods orders, jobless claims, personal income, new home sales, consumer sentiment, not to be confused with consumer confidence. Different universities or groups putting those numbers out. The petroleum status reports, interesting to watch oil and gasoline as we move into the winter season, as well as geopolitical events to watch. And then Thursday, Thanksgiving, and it doesn't say that there's anything here on Friday. If we were to go to the Traders Education Network website, you'll find a lot of other in-depth economic calendars and global economic calendars. So for those of you who may be interested in, worldwide global type calendars, we have several calendars to pick from. For here, we'll just focus on the U.S. events. But if you click on that, if you want to get a heads up on the week ahead, you're able to go ahead and shift the date. And there's nothing else. Fed balance sheet and money supply, Baker Hughes rig count. New York Stock Exchange closes early on Friday at 1 o'clock, so we're in a short week, but we do have a lot of news scheduled and unscheduled. We also have the geopolitical issues taking place. One of the things that we could go ahead and look at is the fact that the Federal Reserve unannounced meeting, if I could spell right. Let's see if, look at that. You gotta love Google. They can go ahead and figure out what I'm typing. So, November 2015. Today's 23rd, isn't it? So there is a closed meeting of the Board of Governors today at 11:30 as we speak. Interesting that they're going to do this. Most people, who is most people? We're not most people. We're on Capital Discussions. But the general public sometimes doesn't remind people that the Federal Reserve at any moment of the day or night, any day of the calendar, could raise or lower interest rates. And so the possibility of the Federal Reserve raising interest rates, surprising the markets before Thanksgiving, it's a possibility. but it's something to supposedly there's some expedited procedures taking place. So just something to be aware of. All right. So as far as the geopolitical issues, and then we're going to get to the markets. We've got a lot of issues. A lot of people, the canary in the coal mine besides bonds and other issues is the oil industry, which really has been running the Western world and civilization for the past 150 some odd years, is very much in play. If we take a look at the charts of oil, it's kind of interesting. We've opened up 6:30 this morning. We were at 40.44. We hit a peak of 42.70, back down to 41, back up to 42. I've got a bond trader, commodity trader friend that he went ahead and he bought a couple of contracts on crude this morning and was stopped out at a profit at around 41.60. And so I'm not a big believer in the futures markets anymore because of the way that the futures brokers have stolen clients' money, but that's just my personal observations. So trying to trade in the 24-hour futures markets is something that some people would consider, especially here on Capital Discussions. A lot of people like trading in the Russell futures. Nothing wrong with that. And if we take a look here, this is a 5-minute chart. You can see that we've just been grinding higher, and this is the center chart right here on the Russell right here. Over here we have the Dow, also grinding higher. The Russell ETF grinding higher, of course. Now the euro is under pressure. Some of that could be geopolitical. Who knows right now? But obviously, nice support level right here that was broken, and the pound also under some pressure, and then the dollar yen is going through some gyrations. But basically, if you just look at this 5-minute chart for the past since Friday, it's gone nowhere. If we take a look at the daily charts, it's interesting to take a look at gold. And we had, this is why I use different charting programs, because the Thinkorswim charts are good for real-time quotes and everything, but it's just way too easy to screw up the charts. Versus my other charts, but there's a reason for all of these. Let's go ahead and change this. See, I have to reset the chart, so I go back and change time frames, click here. One of the things when it comes to software, and I used to work at IBM, I have a technical background, is ease of use and graphical user interface, otherwise known as the GUI, the GUI. And so sometimes, the people who develop the software, they're just being told to write programs. They have no clue exactly what the ultimate mission is. Working at IBM is something that I can tell you for a fact that I'm sure that there's some really sharp people at Thinkorswim. Some of these are from profit charts or whatever. But every once in a while you do find some good charting programs. eSignal used to be good, then they ruined the interface because they wanted to be all things to all people with iPads. Anyway, what I wanted to show you here on gold is take a look at this. For those of you who are Candlestick fans, a couple of days ago, we had this formation. So here's part of the beginner's lesson of the day. So we've we've got a downtrend that stabilized, and then we have this exhaustion move down where you can see the wick, the candle wick, tried to make a low. It tested support. And then the next day, it was followed through by what some people would call a gravestone doji. Now, a lot of people talk about candlesticks, and it's kind of like, you know, if you don't know much about basketball, all you have to do is talk about LeBron James or something like that, and you know, it sounds like you know what you're doing. So dojis are basically just that when price opens and closes at the same price, but it had made a high and it made a low. You know, this is a classical doji. This right here is close to a gravestone doji. Gravestone doji meaning that price opened over here. It made a high and it made a low over here, and then it closed over here. And you can see that in this case, this bar right here, you can see the open, the close, the high, and no low. Okay, so that's somewhat significant because of it's at the end of a downward trend, downward run. What's very interesting about this pattern that I'm getting into is that the doji is just, you know, one single bar, open, high, low, close. But when you combine, you know, the fact that basically candlestick charting is really all about trying to find inflection points, highs and lows, and they show the emotion that's built into the chart. So when you do have a run to the downside followed by a large bar down that tried to peg out and test support, and then followed by a very small movement over here, followed by the next day in which the market tried to push higher. This is what's called a morning star pattern. And so a morning star pattern is the classic definition to Japanese candlesticks. Morning star. Did I spell that right? Morning star. There you go. Morning star pattern. And what that means is that the sun is on the horizon and it is rising. And then you also have the flip side of that pattern, which is the evening star pattern. Now take a look at this. This pattern right here up on top is very similar to this pattern on the bottom. Let's clear this off, right? If I was to go ahead and just take a snapshot of this one bar right here, and this one right here, almost identical, correct? The difference is this. Let's go ahead and bring in more data. In this case, I have to reset my chart. Okay. Notice what that looks like over here. Okay, so here I'm going to go ahead and zoom back in. Notice this is a very important point that I want to make here also. Depending upon the amount of data that you bring into your chart, when you go ahead and scrunch it up or bring more data or less, it will change the look of your chart and your patterns. This right now looks very much like what's called a shooting star pattern. And a shooting star means that up top in the sky, a star means that it's kind of sitting out by itself. There's a gap of some sort. So, for example, I mean, this is a gap up. So here you have a shooting star. Typically, will go ahead and have a tail, and then the head of the star right here. So it's very descriptive. And remember that the Japanese, the Chinese, they speak and think and they write in symbols, right? You know, I don't really know how to draw Chinese, but you know, they have their symbols, and so they're writing the charts. It builds into their culture, and it's descriptive. So you have this shooting star pattern here. On the bottom, it looks different, right? Remember here, watch. This looks identical now, but it's really got a much taller wick. So when you bring in more data, it actually changes the appearance of the candlestick. And so that's something that I want to bring your attention to. Take a look right here. See that right there? Right over there. That is a great example of a shooting star because price has run to, oh, come on. Here we go. Price has run to the upside, and then it gapped up, and so that star is sitting out in the atmosphere all by itself with the gap, but price tried to test a higher level, you know, trying to get back up maybe to this range up here, and it failed, and it basically closed where it opened with the gap, and so that's a shooting star pattern, okay? This is also kind of like a shooting star pattern, but this is a great example of the difference between a shooting star that is like, you know, you have a scale of 1 to 10 on a shooting star. I'm practicing my handwriting with this. I would consider to be about a 10. Usually I never give anything a 10. I'll call it a 9. This I would call about a 7.5 as far as being perfect. 10 being a perfect shooting star. You want to know a perfect shooting star would be way up on top over here with a gap up. And it would also have closed lower than the open. Notice that this is blue. My charts, I have set blue for being closing higher, red for closing lower than the open. In this case, you can see that the candle is blue, meaning that the price closed higher than it opened. A true shooting star signaling a reversal should be closing lower than the open. So there's a lot of what I've just given you is kind of like a really in-depth examples of shooting stars, and also this morning star pattern right here. Okay, and you can use these candlestick patterns on anything. This is really a little impromptu lesson on candlesticks, and specifically on just a couple of the in-depth candlestick patterns. Notice I'm not looking at volume. I'm not looking at any other indicators on these charts because this is on gold. This is on the futures chart of gold. Steve Nissan and Stephen Bigelow are two people who have dedicated their education in trading and investing on candlesticks. and both of them say that you need to have a Western style indicator such as a stochastic or a MACD to confirm a candlestick pattern as a reversal point. As far as dojis go, you have dojis everywhere all the time. So let's see, Robert's got a question. How is it different than a spinning top? 4 candles earlier, followed by another doji or spinning top. Okay, good question. Okay, let's see, I've got Badresh. I'm going to make you a panelist so you can go ahead and add your comments in here. Okay, so okay, I think you had typed that in a few minutes. I wish that these comments had a date and time stamp because I think you had asked that question when I was going over the evening star pattern. So a spinning top is really dedicated. This is a spinning top right here. Let's go out to Google for a second. Come on. You're going to get me to Google? Okay, that won't work. Da-da-da-da-da. Da-da-da-da-da. Here we go. And I'm gonna go ahead and kind of show how the Japanese have really they really take things from one part of life and apply it to another. And so you can see that the spinning top, in fact, if we go out to Wikipedia, history. What's the history? What's the history? I'm wondering if a spinning top really is Japanese or Asian in nature. Spinning top history. No one knows who spun the first one. Okay. So you can see how I really kind of get into this. But the idea is that spinning top, notice in this case, a balanced spinning top is equal. It has the equal top to bottom. Take a look at. Okay, look at these. This is more like a gravestone doji that I was just showing. So, okay, so I sit corrected. Some spinning tops. Oh, you got some other tops here. Some spinning tops are having long wicks. Okay, so much for that. What I've just done is educated myself on the history of real spinning tops. When I was a kid, it seems to me as if the spinning tops were more balanced, where you had the center weight, and you could go ahead and thread the string to make it spin, either on top or on bottom. It didn't seem to make too much difference. So a spinning top for me would look more like, and also what the difference is that a doji is basically where the open and the close are pretty close. They're pretty close together. They can be a little bit different, but a true definition of a doji is that the open and close are identical. We can give it a little bit of leeway. This right here is kind of like what I would say is, you see how thin the body is? I would call that to be still more of a doji. However, a spinning top, let's see here. spinning tops. We're really going off on candlesticks today. Spinning top kind of looks like this right here. You know, as far as I'm concerned, the way I define the spinning tops. But you are asking about 4 bars back, which I think you're saying this one right here. Robert says a low center of gravity is good for a top. The challenge is that the lower it is, the easier it is to stop when it gets unstable. Okay. Right. And I think that, you know, the pictures of the spinning tops that I had there from Google were showing just regular, you spin them with your finger. I remember the spinning tops I played with as a kid had strings that I would, like a ripcord, and they were more balanced on the top and the bottom. And that, you know, it's interesting when it comes to candlesticks. This is a nice little segue on candlesticks today. You'll see a lot of people out there in the trading education world come up with their own names for some of these patterns. But the fact of the matter is that the Japanese rice traders about 400 or 500 years ago designed and came up with the very first candlestick charts. And Mr. Steve Neeson, who used to work at one of the big brokerage firms in the 70s, walked by a desk where one of the traders was from Japan, and she showed him the charts. He ended up dedicating his life, really. He went to Japan, and he really studied in depth candlesticks and translated it all so that we could go ahead and look at it. And it's something interesting also to think of that when we look at charts, let me go ahead and pull up like a fresh chart here, because I used to, let me pull up a blank chart. When I was trading currencies, one of the things that I noticed when I was teaching at a hedge fund, seemed like every weekend there was somebody in the group. We had about 100 traders on the floor. Somebody would come in and they were up all night over the weekend, and they played with some new indicator. And I remember telling somebody, said, "Oh, if you like that, take a look at the Ichimoku." And in fact, I know that there's some people out there now teaching just the Ichimoku. And so if I was to go out, and so here's a Twitter, if I go ahead and add a new plot indicator, and if I type in Ichimoku cloud, okay, so what I'm getting at here is that the Ichimoku, as it sounds, is Asian in nature. And because it's Asian in nature, the idea is that sometimes you want to talk to people in their own language. So when you're dealing with currencies or Asian stocks, or let's say China Life, China Mobile, for example, these indicators may work better because they're more indigenous to where the action is. You're going to find more people trading China Mobile and maybe looking at the Ichimoku clouds and looking at the candlestick patterns. There are some people that even trade based on astronomical signs, and some people laugh about it, but there's some people that just because some of it works and some of it is a self-fulfilling prophecy of sorts, and some of it just plain makes sense that that you want to follow some of these things. So that is, I had a gyroscope. That's right. Thank you, Robert. That was a gyroscope. If that, I am. Thank you very much. That you're correct. It was not a spinning top. It was a gyroscope, and there is a difference. All right. So that was a little bit of a tangent off on candlesticks. I hope you enjoyed that. We only focused really on the morning star pattern. Evening star pattern is the reverse. Okay, so this is very important to understand that the key thing about candlestick patterns is that you could potentially find confidence in a reversal. Okay, and one more thing, and then we'll move on, is the fact that the wicks, I call it candlestick wicks, and I've talked to Steve Neeson, he's talked to my group, and I've taken his workshop twice. For some reason, he calls the wicks shadows. And I asked him, he goes, well, yeah, I guess you're right. I called them a wick. A candlestick has a wick. A candle has a wick. A candle can cast a shadow, but, you know, if you've got a candle, it's got a wick. Sometimes people are burning the candle from both ends. And so it just makes sense. All right. So the bottom line here is that it looks to me as if gold a couple of days ago had put in somewhat of a bottom. It had that morning star pattern. It did rally from about 1077 up to 1085, and now it's tested the lows. Basically, you've got a low of 1063. If it breaks below there, it can continue to drop. Oil has also gone ahead and been putting in some interesting moves. And just when you thought it couldn't go any lower, okay, it did break the 40 handle back on August 26th at 37.50. Notice on the 24th, that was the day that the Dow was down over 1,000 points on the open. Coincidence? I don't think so. Everything got basically deflated, or a lot of money was obliterated, followed by these huge, look at these 3 candles right here, huge runs to the upside. And we are now in the shadow, okay? This is how I use shadows, okay? We are in the shadow of this high, and basically I would encompass this entire area. We have basically a little bit of an intermediate. We tested a high here, but we also have another intermediate high and low area right here. So it's interesting. My futures trading buddy, a couple of points on a oil futures contract can put a spring in your step, and you can see that right now, even on a smaller basis, we're stuck within this range right here. All right, so that's enough about oil. Any questions on any of that? Any questions on candlesticks or anything? All right, very good. Let's go ahead and take a look at last week. We had opened up a trade on the IWM, and while option view is loading, I want to go ahead and show you guys that on Capital Discussions, if you go into the library and you click on Jerry Furst, my name, and hit refresh, you'll see that we had and I want to thank Brett for typing up the notes, keeping track of my thoughts as I've been putting these together. I didn't update this yet, okay? But I went ahead and I discussed the IWM, which is the Russell ETF. I had gone ahead and gone into great depth on charting and technical analysis, where I started with a clean chart and came up with the support resistance zones that you see right here. All of these lines were drawn fresh last week. And just as a refresher, for those of you tuning in for the first time watching the video, we have on the far left over here, well, we have my watch list, but we have the 15-minute short-term chart. Notice that price is going in a stair step up, and you can see these Fibonacci clusters right here. And if I was to click and drag, this is the difference between Thinkorswim's charts versus the TC2000 charts. If I click and drag and draw on one chart, it's going to draw on the other. And I can also go ahead and say, you know what, I don't want that. I don't want those lines to clutter up my main board over here. So I can go ahead and make sure that this line that I drew is not going to interfere with it's not going to interfere with the way that I look at these other charts on the higher time frame. All right. So the trade that I put on inside the beginner's trading group simulator here for the IWM was the 110 call calendar. And this is what it looks like now. This is the risk-reward graph. This is now 12:41, so we're 40 minutes into the webinar, or 35 minutes into the webinar. And just to mark the tape. And you can see that we're currently trading at, what, like 117 on the Russell? We're trading at 117.70. Last Monday, it looked like we had hit a resistance level and we were going to go down, and we did for a few days, and then we've grinded our way back up. Now, these charts know nothing about geopolitical events or anything else, and there's a lot of discussion as to why are stocks rallying when we have such crazy news and bad economic reports. And some people would even say that, how many people are going to be going out, spending a lot of money, going out and going into crowds and restaurants. This really does have a dampening effect, the geopolitical issues. Not to get into the issue itself, but just to look at it from a raw economic area perspective. So, national economic activity contracted for third month in a row, Chicago Fed says. U.S. manufacturing purchasing managers index collapses to a 2-year low. Existing home sales have tumbled, weakest annual growth since January. How is it possible that the junk bonds are doing what they're doing? And so the question becomes, why would people go ahead and be piling into stocks? And the simple answer is because they are. And the fact of the matter is that it might be safer to put your money, if you were a foreigner or hanging out in the U.S., to put it into Home Depot. Look at Home Depot making new highs. This is the Dow 30 stocks from stockcharts.com. And maybe IBM is oversold and it's bouncing up, which is what I was talking about a couple of weeks ago. Maybe, what are some of the other stocks? Look at the gap on Microsoft. Maybe Microsoft is going to come back down and fill the gap over here at this moving average. So there's lots of opportunities. And so, especially depending upon if you're a beginner or an advanced trader, getting involved in these individual components, especially around earnings, can provide some nice profits and opportunities. So here's the trade where we went short the December quarterly 110 calls on the IWM Russell, and we bought the January 110 calls. Now, currently, this trade as a net today, November 23rd, 2015, trading at 117.68, is losing about $400, and it cost about $977 to enter the trade. Your commissions and costs may differ. But the fact of the matter is, on one side of the trade, where we bought the January 110 calls, we're up about $2,700, $2,800. And where we sold the quarterlies, we're down about $3,200. So the question becomes, what can we do to this trade? Okay, we have three options. Okay, what are our options? And feel free to go ahead and type in what do you think we can do? We have a calendar spread. We've sold 25 of the December 110s. We're trading at 117.70, and we have 25 of the 110 calls. The spread itself was very inexpensive. What is it? $7.13 minus the $6.76. It was only 37 cents per side, not per spread. So we were just using a round number of $1,000 comparing trades. So, what are our options? Number one, just leave it alone. We can do nothing. Leave it alone. Okay. Two, we can go ahead and close one side of the trade and take a profit. So we can, okay, of course, yeah, the simple one is close trade. We can close the trade. We can just say that's it. I've lost about almost 40% of my trade. I don't want to risk any more. Get me out. That's one thing. So we can do nothing. We can close the trade. We can go ahead and take, half off and lower our risk. What else could we do? Feel free to go ahead and add your comments. What else could we do? We could close the profitable side of the trade. We could close the profitable leg. But if we do that, that means that we would be potentially either naked short on the Decembers, or we could go ahead and create a vertical trade so we wouldn't be naked and our broker would be a little bit more at ease with our trading. Robert's saying if we close the January 16th, then that would be naked. Correct. Right. Big margin. Let's go ahead and examine that in a moment, because that to me, and this is where OptionView really, you can see the strength of using OptionView's analytical tool for examining what would be the best thing to do potentially. Okay. And you have to also, for me, that's going to be by looking at the charts as well, making some more assumptions. And we got into this trade last week just because I went ahead and did my charting and technicals on IWM, and I said, I kind of flipped a coin. We could go up or down, and I said, well, I think we might go down, and it and I compared several trades. You can go back and review the video on that. So let's go ahead and work with that. But I think that this is something worth looking at. What are our options? We can do nothing. We can leave the trade alone. We could close the trade out. We can take some of our risk off the table. We could close the profitable side and either be naked, or we can do the vertical. And Robert is correct that we could be due a lot of margin if we go naked. So let's go ahead and play with this a little bit. Right here with option view, what you have is net requirements and gross requirements. And just to go ahead and give you a little bit more insight as to how the program works, when I open up there's a lot of hedge funds and people who are managing multiple accounts. You can set the parameters, especially, let's say, if you have a futures account and an interactive brokers account and a Schwab account, you have different commissions, and all of these little things add up. So you would potentially go ahead and create multiple accounts. And this is how I also watch and help other clients sometimes manage their trades. And sometimes that's one of the biggest things that I can help with, making sure that people can understand how to morph their trades, not get lost. I don't tell people what to do, but I just show them what I see and take their opinion as to the market and the individual trade and see what we can do with it. So when I create a account, in this case the beginner traders group, I go into the info and I have to go ahead and plug in a little bit of information where securities margins, what are my margin requirements, okay? And option view takes everything, all of this stuff into consideration. You've got securities commissions. So in this case, I've got it saying that we have a 75-cent per option per contract with a minimum of $7.50 per trade, with a flat fee of $14.95 for stocks and then bonds. Okay, so just an example, because all of these things add up. So the net requirements here showing that if putting on this trade, this calendar spread, required $978 in net requirements. Okay, and here's the legend, okay? When I click the legend button over here, you can see right here, this is my 3x3 grid, and I can plug in and configure that grid with any of these variables, okay? And so this is the way I have it. Right here, this is my existing position in the bottom right square, and in the middle right square is the trade. Now I want you to watch the net requirements over here. Okay, this is important. If I go ahead and close out the profitable side of the trade and I type in a minus 25, now it shows that the existing margin requirement is 978. However, if we include closing this trade here, my margin requirements go up to $20,000. Okay. My gross requirements, $80,000. Keeping the trade on, net requirements, $60,000. Okay. Without going into too much detail, you can see the bottom line is there's a huge difference between a calendar spread requiring $1,000 of margin versus $60,000. Okay. Now, if I only click on the top header here for the December quarterly, you can see my net requirement for that trade alone is $62,600. Okay. So just like Robert was saying, if I close this side of the trade And just on naked, that's a lot. That's $62,000. That's a chunk of change for the average Joe. But if I was to go ahead and cover it with a vertical, buying 25 of the 111s, watch what the requirements come down to now. $4,000 in net requirements. Notice, okay, hold on a second. I got to clear this so you can see exactly what this is doing. Notice it says net requirements for the existing trade. Okay, notice that this didn't, watch this. I'm going to delete the 25. Notice it says for both existing trade and a contemplated trade, which in this case there's nothing because I'm only looking at the December quarterlies. Still 62,719. Okay, the numbers are the same. But now that I plug in a vertical as a potential trade, hold on, not I'm going to buy 25, not sell 25. Now we only have a gross requirement of $2,500 versus net requirements. And that's based on the information, okay? That's why it's important that you know how to use the software and you plug in the proper commission structure and the margin requirements. So that's a huge difference, okay? So $4,000, $2,500 requirements, we can handle that. Now, here's the question, okay? What does that look like as far as a risk reward? Okay, it's nice that we're going to go ahead and maybe close out this trade on the Januaries for a profit. What does the risk reward look like? And so notice at this point, we're locking in a loss. And this is why this analysis software is so important, because if you don't know what you're doing with options, okay, you can say, hey, look, I'm going to go ahead and lock in my profit. I hit the details button here. This is if I uncheck this, okay, this is the entire trade. This is if I hit the details button, this shows that I've got $3,400 of a gain right here, okay? If I hit the execute button, closed out that trade, I put $3,400.73, $3,473 of profit in the bank, okay? However, I'm still short the 25 110 calls. So by putting on the vertical, I'm going to be able to cap the maximum loss. Now, look at what this does. This is what it looks like netted out. In other words, and each one of these time decay lines will show you how much money we're potentially losing or making. Okay? So right now, today, here's our $332 loss. If we think that IWM will stop its run to the upside and start to move back down, this might look like a good trade because we are doing somewhat of a repair strategy and we're changing our bias. Okay, the original trade, the existing trade, notice these three buttons up here: existing for E, T for trade only, and B for both. If I click on the E button, this is our existing trade. And I still think that by looking at this analysis, and that's really what this is just showing you how to use option view and how to analyze trades, okay? And whether or not it makes sense, because some people might say, you know what, it would be great if I lock in a profit. Everybody wants to have a winner, okay? So lock in that profit of buying back the Januaries. I bought them for $7. I can sell them for $9. Okay, so great. I got $4,500 in profit. Okay, that's good. But then that short side is going to be a real pain, unless if you want to really get into morphing the trade, which we have that option. Let's take a look at IWM. Notice that the cluster, the Fibonacci cluster that I had drawn last week, okay, we're right there. We're right into it right now. Okay. If I go ahead and bring in more data, for the 117, I'm going to go ahead and I'm going to show all. Okay. What I did here was I have a checkbox on this charting program so I can show all of my Fibonacci's and trend lines. I'm going to include those into this chart. And what I'm showing you here is that this Fibonacci cluster right here is this box right here. Notice that that's where price is stuck on this 15-minute chart, and that trend line is holding price right here. So the idea is that will we be getting above 118? That's the resistance level. So if you have an opinion that maybe we've grinded up a little bit too far too fast since the last time we talked, it could be that we could be coming back down. And so you might want to go ahead and make some other trade decision or morph the position. That's where it all depends on what your bias is. And if you have the gumption to go ahead and start putting more money to work and trading around your existing position. So that's kind of a little bit of an analysis as far as, just one way we could potentially close and morph a trade. If I was to go ahead and I think that when to exit, okay, I'm going to go ahead and add a new slide. Actually, what I'll do is I'll copy this, paste, okay, and options on existing positions. And so, okay, the first thing is determine, are you at a profit, loss, or break even? And what was the original assumption of the trade? Okay. And so what we have right, because entering a trade is easy, okay? And so in this case, the assumption was, just for example, educational purposes, after I went ahead and did all of my charting and technicals, I was saying, well, okay, let's go ahead and put on a calendar making an assumption that price will go down. And the good thing about a calendar is that one side of the trade's going to be probably up while the other side is down. And so then that gives you the opportunity to morph the trade. So when it comes down to the original assumption, okay, was it going to be going up, down, or sideways, direction? Oh. Direction, price, which is price, the time, duration, and volatility, especially if it's an earnings trade. Okay. We don't need all of this to be underlined. Now, if trade is at a loss and we want to review the trade, we don't want to just let it. The worst thing you can do is to just sit back and not do anything as far as analyzing. You can definitely just sit back and let the trade continue to play itself out as long as your assumptions and time is still. So is there still time left in the assumption of the trade duration? And are we at a gain or loss? Okay, so if we're at a gain, that's, is there still time? Okay, in this case, we're at a loss. We're at a small loss. 40% for some people is not a small loss. 40% loss, okay, is where we're at here. So 40% loss is worthy of review. Okay, so what are our options? One, leave the trade alone. Do nothing. 2, exit trade at loss and start again. 3, take a portion off the table. To lower exposure. 4, we can go ahead and, let's keep doing that. You gotta love front PowerPoint. Or we can morph the trade. Okay, in this case with the calendar, we can close the winning side, the winning leg, and we can vertical the losing side. And that's I would say in a nutshell, that is the big lesson of the day. We went over candlestick, a couple of candlestick issues with shooting stars, dojis, morning and evening star patterns. We went ahead and reviewed the IWM trade, where it looks to me as if we've been grinding higher on the 15-minute chart. You can see the stair step. We are definitely inside of this uptrend. It looks like we're trying to get to the top, make a double top up here at about 118, 118.30. And then we went ahead and looked at option view. We analyzed the current calendar trade, and we looked at potentially morphing the trade, turning it into a vertical trade, where this still is not a bad-looking risk-reward ratio. If we believe that we've gone up and we're hitting resistance, and if we think that we have enough time left going out to the December quarterlies, if we do believe, here's the current price, if we do believe that price is going to be moving down towards, let's say, the 107 range or whatever, even if we just get back to the 110 range, we'll be doing quite well on both sides of the trade if we morph it. And so that is basically today's lesson. Any questions? Any questions? All right. Well, what I want to do is remind everybody that you can go out to traderseducationnetwork.com, and if you want to get a free consultation, just go ahead and click on that top banner and take the free survey and get a no-cost consultation to see exactly where you're at, what you want to achieve, what you want to learn on, whether it's option view, charts, technicals, option strategies, trade reviews, portfolio review to help keep you from just letting things go, psychology of trading, anything that you might want some help with. So that is today's lesson. So again, if you want to contact me, my email, jerrybfurst@yahoo.com or traderseducationnetwork.com or investorseducationnetwork.com. And that's it. We've got just a little over an hour now, 1:13. And I hope you picked up a couple of tips and tricks. And join us again next Monday here on Capital Discussions, where we will once again discuss capital discussions, options, and other points of interest. Other than that, everybody, wherever you are, happy Thanksgiving. We definitely have a lot to be thankful for. We're listening to this webinar, broadcasting the webinar, and we do have to sit back and remember that we have lots of things. We have lots of options to be thankful for, and we do have options. Robert, thank you. Brett, thank you. Stay in touch, and see you again next week here on Capital Discussions. Jerry Furst for Investors and Traders Education Network.com saying